Yeah. 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 Turn me up. How low can you go? Death row. What a brother know. Once again, back is the incredible rhyme animal. The incredible D, public enemy number one. 5-0 said freeze, and I got none. Hey, congratulations, Daniel. This year Halloween for the weekend. This year Halloween for the weekend. This year Halloween for the weekend. That's right, Daniel. You got no money, you got no car, you got no woman, and there you are. You got about 30 seconds. So it's 9 o'clock in the morning. As soon as this webinar is over, I'm going to go to take a nap. Nonsensical. Let me remind you that trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Welcome to Forex.Today, the YouTube channel. That's a community of 14,000 foreign exchange traders stationed all around the world, watching the clock 24 hours a day. This is the time we gather as a community to synchronize our watches, align our satellites, and put together trade plans for tomorrow. Please take notes, please ask questions, but also please like, please subscribe, and please leave comments on the videos. Many people, what they do is they just jot down in the comment section the things that they learned in the video, and then you can then search them from your own YouTube page and say, hey, where was that video about the MACD, how to trade with the MACD, and you just type it, pops up. So take notes. What else? The community is sponsored by tradersway.com. Please visit tradersway.com, open up a demo account. Remember, these webinars don't cost you money, but they do come with an obligation. That is visiting tradersway.com, open a demo account. All you're doing is giving them an opportunity to earn your loyalty and respect. So when you're ready to trade real money, you'll have a broker that you already trust, and therefore you can open a live account at Traders Way. But start with the demo, play some demo trades. You'll see the execution speed is fast. The spreads are narrow. The swaps are big. Tradersway.com. Thank you. I think you can tell I haven't slept much. I'm stuttering. Okay, cool. So let's get on with it then. Come on, drawing tool. There we go. Wow, a little slow. La la la. La la la. Top. Could be, right? So one man's exit is another trader. I guess one trader's exit is another trader's entry. Okay. So the interesting thing is bulls see this as support and bulls see this as support, and bears obviously see this as resistance. So what we need to figure out now as a market is whether this goes up or whether this goes down. Honestly, you don't know. Thank you, Henry. Okay. We don't know if that's going to happen, but if you're a bear, you've been waiting all week to set that up. I think it was something we talked about on Monday. Okay, so again, a bear is thinking that, and a bull is buying it up. Okay, what do you think of this one? Different scenario. Okay. So it made its way to 80.00. Okay. Pretty clearly a psych level. So you have to ask yourself, are you still a bull? And are you taking it that way? As a bear, this isn't a very good entry at all. Except for the psych level, you really have nothing. So a bear should wait for a lower low, lower high, and then probably a lower low scenario. For a bull, bulls get it. Okay, bulls picked up 150 pips here, and this would be the next trade for the bull. So on and so forth. Okay. Oops. Oh, man. Wow, that's not helpful. I need to get some sleep. Sorry. Jean-Guy. Anthony's like pullback Thursday, or profit-taking Thursday is more like it. I'd say the majority of the time, I haven't actually, actually measured it, but I feel like the majority of the time I'm exiting on Thursdays, right? By Thursday, I'm usually setting up next week's trades, which means this week's trades are done. So I'd call it take profit Thursday. What's up, Joey? Okay, so that's what a bear would be thinking. I think more just, oops, range. Okay, I just think more inside range type stuff. But late at night, something ain't right. All right. Let's check this out. So there's our top, our Tuesday top. There's a Thursday double top. Okay. So again, you have to ask yourself what you want to do next week is the big plan. Notice, perfect, perfect. Okay. I'll remind you that this whole thing up here means exit, which means this is really a profit-taking area, and you could have been at the museum donating your time as a docent teaching art to children. This is a Monet, children. It's ugly. No, sweetheart, that's a Manet. The kids and I were talking the other day, and I was reminded of a joke I did where we're in Washington, D.C. at one of the major... No, wait, we're in New York City at the Met. That's right, we're at the Met. And we go through this room, and giant room, and it's got furniture and stuff. And the kids just like beeline straight through the room out to somewhere else, like knights in armor or something. And so I'm looking at this furniture. I'm like, no one cares about this furniture. I'm looking around like no one really cares. I'm like, it's in a museum and no one cares. No one's looking. They're like, yeah, it's a table and chair. Very nice. So, but no one's in this giant room, and the place is packed, right? So no one really cares about this. But sure enough, at the end, there's a security guard with her back turned to me, looking out in the other room where everyone else is. So I'm basically in this giant room with all this furniture by myself. Anyway, so I come up behind her, and I yell at the children across the room, "That is the worst example of Rococo I've ever seen!" And I woke up the security guard that's just been standing there for 12 years. Just funny. You had to be there. You had to be there. Because usually nobody says anything. Like, ma'am, where's the bathroom? All right. What do you mean details? No, I think she appreciated it though too. I'm like, I'm sure the security guards still talk about it every so often. You're like, remember that day? That jerk came up behind me and yelled a joke about Rococo. Well, hey, if it ain't Baroque. So, yen, meh, euro, meh, pound, Kiwi, woo, Swissy. So, risk off. Fundamentals. So let me give you an example. First of all, I mean, I'm not going to tell you the fee. Click on the button. Sorry, I'm really tired. I'm really tired, so I'm pissy. What's in the course? How about this? In the 4th hour, you will be managing the balance sheet of a commercial bank, because that's the setup to teach you central banking. Once you learn central banking, you'll learn about the money multiplier and the fractional banking, the fractional aspect of banking. So, yeah. So anyways, I look at this risk off, and then, yeah. So it's very moderate. So I guess what we're really just looking at is simple profit taking and kind of done for the week almost, huh? Yeah, jump in, Aisha. It's good. All right, so let's take a look. Bum, 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 bum. Okay. Again, just tops. We already know that this was the weekly plan, but when you back out way up in here, buh, 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 buh. Well, Aisha, normally it's $1,600, but yeah, there's a discount right now. Great. So for the cost of, all right, so I'm in 2 classes at Harvard right now, 2 classes. One of my classes has these 2 textbooks. These 2 textbooks cost more than the entire FX Bootcamp course series. And that class has another textbook. I think it's this one. So, yeah, it's retardedly cheap. But I only did that because of COVID, because I'd rather you guys be studying Forex during COVID than Netflixing and chilling, or whatever they say. Henry says, South Africa interest rates cut by 0.25%. Well, that'll change everything, huh? So let's go over to exotics. It's so funny that banks do things like that, right? Like, oh my God, really? 0.25% lower interest rates? Well, that changes everything, right? Pip and chill. So we'd be bearish on this typically, so let's just do it that way. All right, South Africa is out there trying to do their thing. HK says, I'd like to buy it in August if that's still possible. It may not be possible. Okay. I mean, if you did, it'd be the very first early days, but I can't promise that because right now the plan is to raise the price because we're launching new services in August as soon as I'm done Harvard. So, yeah, no, I can't promise that. All right. Right? So I can't promise that. But I can tell you, we've been working months and months and months and months on something amazing that's about to be released. Changes everything. All right. So what do you think? So this is almost a full Monty, M1 to M4. Now what? Yeah, HK. Yeah. Not yet. No, not yet. But again, you have one. You can just do it yourself here, right? But I'm behind on a lot of things. So I have to announce the auto installer. I have to announce the biased pivots, and then I'll re-release this. Okay. Yeah, you know what? Maybe this is broken. This happened yesterday too. Someone's like, I don't know. Hang on. I don't know how to do it. So let me check it. Hang on. Okay. How do you do it? So I'm only bringing this up because someone had the same question yesterday. How do you do it? Okay, so there's the website. I'm streaming, so everything is slow. Why isn't this not loading? Anyways, you click the giant button. Hang on, my PC is slow. There we go. All right, so you click the giant button. Okay, and you put in the coupon code. So when you get to the billing information, it's less than 1,618. It's 382. So you have to type in that coupon code, the one that says right there. Yeah, that's what it says. Type it in. Type it in. Okay. You got it, LaFam? LaFam Bam? You have to type it in. Okay. So I don't know how you want to play this off with South Africa. So here's the one with the USD. Just like every other currency, it seems, we're at a predictable level of challenge to current trends. No. Okay. So, bears are still trying to take this down, and a bull now would be a buyer sort of in here. Cool. Bam! No, I cannot. I don't think I can keep it till August. September, forget it. Because we got something new by then. There's something new. So, all right. I was supposed to take it down in June, by the way. It's almost the end of July, so yeah, hurry up. Yeah, I'm fading here. I need to sleep. So why don't we do this? Why don't you ask me a question? Why don't you ask me a question, and maybe I'll try to answer it. What currency pair would you like me to cover? I'm getting dizzy, so How can I help? Oh, thank you, Brad. Oh, I'm happy to do that. I saw it the other day and thought of you. Okay. All right. Cool. Nothing. I don't see anything here. No. No. It's, well, let me break it down this way. Um, there was the bearish entry on the first day of the month, and that's all I see there. Here's the bullish entry, I guess, on the second or third day of the month. I guess that's the first Monday of the month. And I don't see anything else. When you get a course, the course is videos. The live trading group meets once a week. But that's, again, not the course. All right. See, so that's how I see it, Brad. There was something maybe to do in the first week, and there's nothing more. That's it. Okay? Okay? All right. So another one, oops, another one is Aussie versus US dollar. All right. I don't trade stocks, but my wealth manager buys them for me. But yeah, I don't trade stocks. So I bought Apple at $6. I bought Bank of America at $5. I bought Cisco Systems at $7. Um, that kind of stuff. But I'm talking you out of it, Brad. I'm talking you out of it. Unless your dad's a financial advisor. How does interest rates affect South African rand? Well, if you were scared to invest in South Africa yesterday, you're probably still scared. Is it a lifetime purse? No, it's not. How could I offer you access to my server forever? Even King Tut couldn't offer you a deal like that. That's not what financial advisors do, Brad. They sell you products that the firm wants you to sell. Um, and really, what they get paid to bring in more clients. So, if you want to be a hedge fund manager, don't become a financial advisor. So, anyways, Aussie dollar. Okay, you have to ask yourself where you're going. Do you want to continue this trend? Morning, made up. So, Brad, I can imagine how good you'll be. That's why I would tell you not to be a financial advisor, because if you're that good, you shouldn't be a financial advisor. You should be doing, right? I mean, look, you're a financial advisor. You're going to make somewhere between 300 and 500,000 a year. That's it. That's maximum. When you're old and gray, you'll be sitting on 400K. Hey, that's a nice t-shirt. When you're old and gray, you'll be sitting on 400,000 a year. You'll be flying first class to, once a year on your little vacation. So this is a scene from the movie Wall Street where he's in the limo with Gordon Gekko, and he says, flying first class, right? You think, right? You're all rich and powerful. He's like, but you need to be liquid. He's enough money to own your own plane. So it depends on where you want to go. So if you want to cap your annual income through a profession, right? Especially if you're going to work with one of the big firms so that you have a nice business card and a nice office, you're going to get to the point where at the end of your life, you can pay for a first class ticket and fly to Europe and live the dream, but you won't get more than that. Okay? So, if you want a job, that would be okay. If you want more than that, you should probably not become a financial advisor. I think if you're a trader, you won't enjoy it. You won't like it. You just won't like it. Peter says, where should I draw the standard deviation? What you do is you go insert, channels, standard deviation, and you measure the data set that you want to measure. Of course, that time it didn't work for some reason. Okay, there you go. Why would I have a Discord channel like other traders? I give you an hour or almost 2 hours a day. I'm done. I have things to do. Like, I don't have a giant business selling you stuff. I got other things to do. Sorry, guys. I sound super bitchy. I am unbelievably tired. I'm unbelievably tired. So let's go on to another currency. Pound, yen, Aussie dollar. So I did your Aussie. All these are pretty standard. How about another request? Oh, euro dollar. What? Sure, why not? Thank you. Do you think it will move in the next week or two? Significantly? No. But, I mean, did anyone make 1% this week? Remember, an amateur doesn't think that's a lot of money. That's a lot of money. That's a good week. Yeah. Nothing. It's a quiet week in the middle of summer. But made my 1%, not a problem. Why does the date say I missed it. Sorry, a little slow. Okay, 12% is too much. You need to lower your leverage. Okay? And then the week before, there were opportunities to make your money. Okay? So, yeah, you got to be careful. Okay? Well, Daniel, the issue is leverage. So the 12%, if they cut in half, that would be 6%. If they cut that in half again, now we're down to 3%. So they got to cut their leverage a lot. Okay. Daniel, I did say that, I think it was yesterday or the day before. It wasn't a hard and fast rule. That is just me saying maybe you're over leveraged. Okay. In the beginning, you'll probably have to trade more than that, but I'm planting seeds. Okay. So anyways. But it's not even really a guide. I'm just trying to tell you lower your leverage. Okay. So if I'll do it this way. If you average 4% a month, you make 100% more than the best Forex traders in the world. Or at least the best US-based Forex CTAs. Okay? So, for example, you're an institution and you have a coffee meeting in the morning and they're like, hey, we decided to invest $100 million into Forex. Or even, I guess that's hard for people to grasp, but how about $1 million? They're like, yeah, we need exposure to the foreign exchange market. Let's find a Forex trader to trade our money for us. How do you do it? Well, there are lists of CTAs. CTAs are commodities trading advisors, which are regulated entities in the United States to trade other people's money. They're regulated by the National Futures Association, who receives its powers from the Commodities Futures Trading Commission. So, you want to find yourself a Forex trader. So there are lists that track their performance. Okay, Barclays Hedge is one of them. And when you look at, first of all, you want to look at CTAs, and then you want to look at macro, and then under macro, some CTAs then also register as a Forex trading firm, which means more fees, more regulations, and all that kind of stuff. But you're a subset of macros, okay? And if you look at these guys, so now they're under Forex, there's less than 100M, under 100M AUM, or more than 100 million. That's how they look at it, right? So if you're a tiny, pissy little Forex firm, you have less than $100 million. You're a peon. They laugh at you when you walk the streets because you only have $80 million. Okay? So let's look at that. This is your competition, and the best. You can look at the top 10. Okay? Let's say the top 5 traders. Out of all of them, make less than 2% a month. Okay? So you come along, you're like, I made 12% this week. Either you're 1,000% better than these people that have been doing it for 20 years, or maybe your reward is a function of risk and you are taking lot sizes that are relative to how much money you actually have in the bank is retarded. Now, When you have nothing, here's what happens with humans, and this has been studied a lot. When you have nothing, humans tend to risk a lot. And when they have a lot, they tend to risk less. So you're like, I'm making 12%. Okay, you're making 12% on $200. Whatever, right? But I'm trying to teach you to think about and really I'm trying to teach you to train yourself so that if you were trading a $50 million fund, a tiny, tiny, tiny little fund, you know how to do it properly. Okay? And trust me, you got real money, you won't be taking those big risks. So you're actually training yourself to not trade properly when you do things like that. You're hurting yourself on the long run. Because you're like, okay, Wayne, I'm going to take huge risks now and gamble everything. But as soon as I have real money, I'm going to stop all of that. It's not true. You will never get there because the people with money don't think that way. Okay? So you need to train yourself how to be rich. You need to think rich, right? Again, if you go to a rich person and say, invest in me, I'll make you a lot of money, you don't get it. You don't get it. You're not even on the same planet as this person. They'll look at you and they're like, what the hell's wrong with you? I'm already rich. Why would I need that? Okay? And they certainly don't want to look at your track record and see, right? If they look at your track record and they think this, and I'm telling you, you have less than 1 second. They look at that and they're like, no thanks, pass. You're like, what? You're just not a good fit for our portfolio right now. But keep in touch. Maybe in a few years, things will be different. Bye-bye. And that's it. You're dead in the water. Bye-bye. Oh, close the door behind you. Thank you. Thank you. So I want you to train yourself to trade properly. I'm telling you, if you can do 3% a month average, and it goes like this, right? You go from 1.5 to, let's say, 4. Okay? If your returns bounce between 1.5 and 4, after 1 or 2 years, you'll get some friends, families, and fools. Your mom's masseuse will invest in you, which is really weird, but you got to work your network. And then a year goes by and you're doing really well. That person introduces you a couple of buddies. Now you raise some more money. And now you've been doing this several more years, and then you've been networking now. Now you can talk to people outside of your immediate community, let's say. Now you're going to networking events and meeting people. And they're like, so what do you do? Well, I've been running a Forex fund for the last 6 years. And like, really? That sounds interesting. You're like, oh, well, you just have to know absolutely everything and accurately predict the future every single day. So it's not that big of a deal. Luckily, I love central banks and macroeconomics. Oh, okay. So you start networking and you build your little business, and someone comes in and puts in some pretty big money. Whatever that means. It's not big, big, big money, but doubles your stack in a day. Maybe triples. Okay? So I don't know what that means. If you go from $100,000 to $500,000 or something, I don't know, but whatever. But you're now meeting people, showing them what you've been doing, and you have a viable business. You understand that? Do you need an economics and finance degree? No. You need a track record that shows you can produce 1.5 to 4% per month Every single month, month after month after month after month after month after month after month. After month after month, you're a machine. I'm not asking you to make $1 billion. I'm not asking you to take big risks. I'm not asking you to make money rain out of the sky. That's not what wealthy people think about. That's not what institutional investors think about. So you have to change the language by changing your behavior. What someone with money wants is a consistent cash flow. Okay? So think of it this way. If I gave you $100 million, or sorry, $1 million, what are you going to give me in return? That's the only question you have to answer. What do I get in return? Okay? And you say, well, my track record shows I can produce 6% per month. Okay? You take a little more risk. Okay? And they're like, 6% a year? You're like, no, 6% a month. And I've been doing it for years and years and years and years. So at the end of 1 year, you'll have $2 million. Because it compounds over 12 months. Boom, you have $2 million. So you can tell the investors, say, in that case, withdraw $1 million. Okay? And leave the other $1 million with me. Okay? We call that a 1x clawback. So they get now they have no risk in the market. Do you understand that? They got their $1 million back. It's been 1 year. If they bought $1 million, $1 million in real estate, okay, how long until they get their $1 million back? This is your competition, right? When can you claw back your 1x? Okay? So in any type of investment, you want to say what kind of cash flow is there? Okay? And what kind of appreciation is there? Appreciation, okay? Now, if you're a Harvard MBA like myself, you could do a discounted cash flow analysis of this whole thing and put a time value on the money and blah, 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 blah. But ultimately, the investors don't care about that because they're not even, most of them, unless you get institutional, most of them they're not, they're just rich, dude. They're not brilliant. They're just rich. So you're like, okay, well, you're going to earn this cash flow. You're going to collect rent and pay your expenses. And at the end of the year, you're going to have a 15%, right, left over. And then maybe in 5 years, if the apartment building appreciates, we'll pull some money out. But in 5 years, when you do a refi, on a $1 million investment, would you already have your $1 million back? Probably not, right? So $1 million gets you a $5 million. So I mean, in a hot market, you might be able to pull that money out. Okay? So anyways, I'm just trying to show you that if you're producing whatever your cash flow per month, the secret sauce isn't whether it's 4 or 5 or 6. The secret sauce is doing this every month for 5 years. Because now you have a legitimate cash flow. Okay? And you can say your goal is to slowly but steadily return enough capital so that they are risk-free with you. So if they put in $1 million, you're like, hey, right? If you put in $1 million, give me a couple of years and I'll return that through cash flow back to you. That's my goal, is to get your capital back to you as soon as possible. If you have MT4 on an Apple, it should work. But how you do it, I don't know. I have someone hounding me. They're expecting customer service for their templates. I'm like, what the hell? I don't know anything about your Mac. Call Apple. So I don't know anything about Apple, but if you have MT4, it'll work. Yeah, well, I don't understand why you wouldn't buy a $200 computer. Why would you use your kid's MacBook? Okay. So anyways, the only way, the difference between a trader that makes 2% a month, 6% a month, and 20% a month, they're not likely trading more, and there certainly isn't like smarter. Okay? The difference between these traders is risk. And by risk, I'm defining it as the lot size. Okay? And so you should be able to work with a client and find their risk tolerance, right? I mean, you should know your client, right? KYC. So you meet with them, you're like, what is your risk tolerance here, right? And you can adjust the lot size based on them. 20% is stupid. I mean, you could totally do it. It's not even that hard. You're just assuming so much risk that anyone with real money would look at what you did and say, too much risk, pass. And you just lost. Okay? So, right? So there's now two sides of this. There's lot size, and then there's market conditions. Okay, which means, let's say January through June, I'll say January through May, you can make, let's say, 6 to 8%. And other months, you only make, 2 to 3%. Because the market conditions change. And what will happen when you get to a sophisticated level, they'll strip out your performance and they'll have some sort of beta analysis. And then they're looking at this, which is your alpha, and look at the difference between the alpha and the beta. And they'll call this a risk-adjusted performance, and they might do Sharpe ratios and look for ketosis in your returns, and like, oh my God, look at the fat tails on this thing. And they could really break this down, and they want low risk. They understand if the market dropped 10%, this is the beta. If the market dropped 10% because there was, a COVID crash, and you say, yeah, that was horrible. That month I made 1%. You're huge. You're a winner. or even you lost 1%, but the beta lost 10%, they're like, oh my God, really? That's kind of where you want to get. Okay? That's kind of where you want to get. You want to be able to sit down and explain these things with someone. And then you'll get to a point where you don't explain anything to anybody because they know exactly what they're doing. So anyways, lower your lot size, guys. That's all. Okay? I want you to think bigger. Okay? Think of yourself as you're a Forex trader, and when someone is deciding whether to invest, they're thinking about the stock market. They're thinking about real estate. I might say stock and bonds, but they're thinking venture capital, especially if you have a little more money. What else? Your competition is sometimes their boat. They're thinking about their 36-foot boat. They're thinking about getting a 42. Seriously, I'm not joking. Or it's a good story. They like bragging about their Forex guy at parties, at cocktail parties. That's why they invested. I'm not joking. Oh, I got this Forex guy. Oh, he's great, man. He's like a money machine. I guess you can do metals like gold or something. But I don't put it in the same category. That's a different category. There's traders. So you can flip like a ton of gold. Okay? Literally, if you're flipping that, that's one thing. If you're buying gold and like holding it, that's not the same as this either. You might get capital appreciation, but you can also lose on depreciation. You get no income. There's high carrying costs. So unless you're like a sheikh in Dubai or something, I'm not going to put metals in there. It's not quite the same thing. But my point here is I want you to start thinking about when you approach someone to put in a pretty reasonable amount of money, whatever that is for you, they might choose you because you're fun to talk about. They like bragging about you at parties. Or you could say, you know what, keep the boat, give me a couple of years, and my trading will buy you that bigger boat. And you've seen my track record. You know I don't gamble. Okay? So you're never going to compete against another Forex trader because they don't know another Forex trader. And I think it's pretty rare that someone is shopping for a Forex trader. Okay? But it can be done, of course, when you get institutional. So what you want to do is get 100M under your management, and then you can bring in institutional money. Okay? Because once you get to 100M, a small institutional investor could give you, let's say, 5M. Okay? And that might be more than you raised in your first 10 years. Okay? But there are lots of limitations to institutional investors. And that's why Barclays Hedge, for example, will bust them out to less than or more than. Because you'll never raise institutional money with less than that. And I don't know if 100 million sounds like a lot to you, but like, you know, Brad's talking about being a financial advisor. They typically max out around 300 million. And they're just some peon down the street. Right? They're just peons down the street. It's some dude, and he's got a partner that he doesn't like, and a staff that he doesn't treat well, and it's a team of 4 people, and they have 300 million under management, and they charge 1%, and now their firm takes at least half of that, but whatever. And you just sit on that, and what'd you do today? Nothing. Oh, I tried to get more clients. What's your goal this week? I need to try to get more clients, right? They're salespeople. But 300 million is a small little financial advisory firm. Pretty run of the mill. So 100 million AUM is small, but for Forex, we're also leveraged, 1,000 to 1, right? So all of a sudden you're like, I can control trillions of dollars, right? So whoa, whoa, whoa. The cool thing is you don't need big money to make big money. You don't need big money to make real money. How about that? I mean, think of it. I'm telling you, you're probably laughing somewhere inside. You're like, the dude's telling me to make 5% a month. Okay? You could dumb this down and say, yeah, you're telling people you can make 100% a year. So do that slowly and consistently for 5 years. Do you think you'll have trouble raising money? Seriously. You're okay? You're not going to get 100% a year bringing in 12% a week because you're going to blow up your account. Anshu says, but maybe gold goes to 2,000. First of all, never say maybe. And then who cares? So what? Okay. No. Someone said they did 12% this week, and I'm still harping on the fact that they're over leveraged. If you just do this, you're 6% a month every month on average. So you're averaging 100% return per year. And you do it slowly every year for 5 years. You won't have any problem raising money. Okay? The stock market averages 8% return. Did you guys know that? Per year. And you come along, you're like, I make 100% a year. It's already stupid. Okay? 50% a year would be great. So 100 is ridiculous. But the thing is, I want you to be focused on the 5 years. That's what I want you to focus on. Okay? And then someone will give you money, pretty decent money, and then now you actually have to do it. Okay? So, you convinced me because you've been working with me for several years. You put in 5K. I put in 20K. So now, got to change the color. I think the things do, right? So after 12 months, so in year 1, it grows from 25 to 50. So that's year 0, sorry. Year 1, you have 50K. Year 2, you have 100K. Year 3, you have 200K. Year 4, you have $400K. And year 5, you have $800,000. You want to get rich? There you go. Do 5 or 6% a month every month. It's compounded, La Femme. Okay? So let's say you're making 10% a month. Let's do that, right? And this, I don't like doing this without a calculator, but you start with $1,000, and at the end of, right, you have 1,100, and then 10% of that, right? And then 10% of that, and 10%, and it's growing faster. Anyways, so my book, I open up with a quote by Einstein. Einstein was doing a press conference about his theory of relativity, and a reporter asked him about what Einstein thought was the most powerful force in the universe. And Einstein leaned forward and said, compound interest. Okay? So look, guys, I'll show you how important this is. If you are consistently doing 6% a month, I'm not telling you can or should, whatever. I'm putting you through the process of thinking about money differently. If you can do 6% a month, for 5.5 years, you'll have $1.5 million in cash. By the way, how much are you going to give me? If you put in 5K, and I put in 20. Just a thought. Because what happens here is that you have an investor. Okay? And you can see why that matters, because if you start in year 0 with 5K, okay, at the end of year 1, you have 10,000. At the end of year 2, you have 20. In year 3, you have 40. Year 4, you have 80. Year 5, you have, right? $80,000. Sorry. Wow, I'm really slow. 5, 10, 20, 40, 80,000. I know what I'm doing wrong. It's just funny. I'm really slow. Okay, so now at the end, right? So at the end of 6 years now, you have 320,000. But by working with me, we have 1.6 million. What changed? Nothing changed except your starting balance. Okay? $20,000. Okay? My 20K to you is worth 1.3 million. So if you gave me $1 million, I would double the amount of money you made. You understand? If you gave me $1 million and you only got 600,000, okay? right? You see? So I'm just trying to change, right? And pieces, so how much return do you want? Well, you should be able to make an offer. You should be able to look at it. It's simple math. So if you gave me $1 million, you'd double the money that you would have made without me. That sounds like a pretty fair deal, right? So anyways, I'm trying to get you to think about lowering your lot size and being a consistent trader. Do you understand? There's nothing get rich about this, but you know what? 5 years is not a lot of time. I just showed you in 5 to 6 years, for some of you, you could radically change your life. Some of you have the 25,000 right now. You can start today, and in 6 years, have $1.5 million in the bank. Oh, look that up. Thank you, Era. Okay? I want you to succeed. I want you to think about your trading like a business. I want you to prepare yourself for greatness. This is Forex, not Fortnite. It's not a video game. I will see you tomorrow. I am going to go sleep now. And then I got to go. If you're in my live trading group, I'll see you guys tonight. And then I will be in class to probably about midnight. So peace on earth. May the pips be with you. May your profits be above average. See you guys.